Have you ever wondered what happens during a breakout? What are you looking for? Today we're going to take a look at American Eagle Outfitters, AEO. What do we look for and when? How long may this take? Stay tuned. And good afternoon. Welcome to the Trading School. I want to answer a question here on a video which came up recently about a particular stock I've got a target on and been watching for a few days. The symbol is AEO, American Eagle, AEO, Alpha Echo Oscar. If you look at the chart here, let me open this up and make it a little bit bigger for you. Back on the 2nd of January, we had a high here of 21.58. The next day it started falling down, and the second day after that, it came back up a little bit, kind of sideways, and then fell again. But we did not know at that particular time if this was bottom or not. So the next day, because of the stock gapped up from this close here at 1981, it gapped all the way up to $21. That's when this little indicator, little arrow here, indicated this was the bottom, and it reversed. It's going back up. So it had a slight up and down movement here on that particular day. The next day it goes up again, next day back up again. It's very, very close to where the high was on January 2nd. So here we have a little dip. It runs back up. But what I've been watching for is this confirmation here that this was the bottom. The second confirmation I'm looking at is this red arrow above this 8-day exponential moving average, and it closed above that. So that indicated that it's on its way up and starting to break out again. So we have a little V-shaped pattern going on. But the most important thing for me is, let me get my little circle going here. Most important thing for me, I'm watching these 5 dots here at the bottom, 1, 2, 3, 4, 5. And there's a light blue bar showing here today. So what I'm waiting for is that second blue bar to be above the first one here. That would be my time, say, okay, pull the trigger, it's time to get in. So what I will probably do, I've already got an alarm set at 2170. And so if it moves up at that particular time, the alarm go off, I will look at the buying, I will look at this particular bar, second blue bar, and buy in at 20% of my full position I'm looking for. So it goes up 2 more percent, I'll buy 30% of my full position, and then goes up again, another 2%, I'll buy the last position, 50% of my full position. So in doing so, if this does take place, like we hope and expect, and it could go from today, at this point, it could go up to in the vicinity of over 5% increase in just a matter of a few days. That's not bad. As long as it stays above this blue bar, I will stay in it. If it goes above this particular 1.6 percentage increase, 161, I'm sorry, I'll stay in it as long as it stays above this blue moving average line. So when it crosses below, I will probably see an indicator here at the very top. That is the top, so I will get out. So we don't know what that could be. I mean, it could be $22. We don't know. It could be at $24, but I'm going to ride it as long as I can. This is what we call a swing trade. We're just swinging from the breakout up to where it starts to come back down. There will be a point in time where it will come back down. So how much is that paying here right now? If you look at the screen, we're looking at a 3-month daily chart here. Each of these candles is a 1-day period of time. Green going up, red coming down. But over a 3-month period, we've had a over 29% increase in the growth of the stock plus the dividends paid out. And if you look here at the dividends being paid on that particular stock, it's only 2.3% yield, has a good PE ratio, price to earnings ratio, which is 19. Anything below 20, I'm happy with. But 2.3% is 12 cents per share paid out every quarter. So with that being said, over a 3-month period, we've got a 29% increase. And look at it here for 6 months, we've got 83%. Not bad for just 6 months of holding a stock. That means you don't have to go out and work for someone else. You're working for yourself. Excuse me. So, like I said, if things change and I get a second blue candle here, or bar, I should say, that means people are buying in. Momentum is picking up. There's more buyers than sellers. I'll get in at this 21.70, but I'll wait till then. It could be tomorrow, it could be Friday, it could be next week, but I'm sitting back and waiting right now. Why didn't I catch it, or why didn't I catch it and buy it right here when this indicator happened? On that particular day, the indicator was not shown because that does not mean that is the end of it. That indicator was shown here because of the next day the stock reversed and went up. That indicates a reversal of the pattern. So this is a V shape, or you could call it a cup, but I'm going to ride it as long as I can. I hope this answers some of your questions. There's no mystery to this. Once you follow the rules, and take this chart back here to a three-month period, but I'll keep you informed. If this breaks out above 2170 or above, I will certainly keep you informed as to when I get in and each buy I make. I'm not recommending this. This is absolutely not a recommendation that this is going to be perfect, but it's what I'm going to do. So if I fail, I fail. So any other questions, pass them along and I will get back with you. So thanks for watching. If you like what you see and hear, hit subscribe, hit the like button at the bottom and subscribe, and that'll give you any indication or notification that new videos are out. So that's it. Thanks a lot, folks.